Hi, if you're a life insurance agent doing business in America over the last couple of years, you've probably noticed that there's a lot of turmoil going on in the GUL space, Guaranteed Universal Life. Today, on this episode of Selling Life Annuities, I'm fortunate enough to have Craig Mira, our RVP for life insurance sales, and we're going to discuss GULs, GUL pricing, and kind of what's going on in that space. Stay tuned. All right, Craig, as I just mentioned, right, lots of turmoil in the Guaranteed Universal Life space, whether it's pricing, product changes, carriers making decisions that might sound strange. For the agents watching this video that may not be familiar with GULs, can you describe what exactly is a Guaranteed Universal Life product?
Sure. Well, the basics with a GUL is you're looking for a protection-focused product. Your niche client there is typically going to be around 60 and older, looking for a permanent death benefit that's going to last forever no matter what, with guarantees. Think a term that's everlasting.
I love that, right? I mean, you see some carriers on television, commercials, talking about permanent term, right? That's really what we're talking about here, but it's really not term insurance. It's a universal life chassis. So as I just alluded to, lots of changes going on. Can you describe some of the changes that are happening in that market?
Sure. As many of you may have noticed, the interest rate environment has been in the news of late. So that's affected many things more than just someone's mortgage rates. It's also affected the life insurance carriers. So for a life insurance carrier, they have to reserve for these guaranteed universal life policies dollar for dollar. In this low interest rate environment, this has made life very, very difficult for carriers. So what we've seen is carriers completely remove themselves to the market or possibly reprice their GUL product so it's not the most competitive priced product in their line.
All right, so intriguing, certainly very descriptive of the scenario, but once again, for novice agents out there that may not be intimately familiar with the life insurance marketplace, what would prompt a carrier to literally withdraw a product and or alter its pricing dramatically?
Well, quite simply, it's no longer profitable for them.
That's what I was looking for, right? I mean, let's be real. If the carrier can't make any money on the product, then they're not going to leave it out in the marketplace. Is there a product out there or a replacement in the life insurance space for that GUL, that guaranteed death benefit segment?
Sure. So a lot of carriers are now entering into the GIUL or PIUL. So either your guaranteed indexed universal life or your protection focused indexed universal life. And it's going to have a lot of the same benefits of that GUL. You're going to have a guaranteed death benefit. We're starting to see guarantees go down to 90s, maybe mid 90s with current assumption out to 120. But there is still one key carrier, and that's our core carrier North American, that has that guaranteed chassis along with cash value that's still priced amongst the leaders in the marketplace.
Yeah, North American, great carrier, and always has been a leader in that IUL space. Are there other, if you chose to go with a guaranteed IUL, are there any other benefits that an agent might be able to sell the consumer that might attract the consumer to that product?
Sure. Since we're talking that 55, 60 and older client, what else is on their mind? Long-term care. So with these policies, these GIULs, PIULs, or even GULs that are still out there, we typically have some sort of long-term care, chronic illness, critical illness, and sometimes even terminal illness options on there as well. That's going to give a layer of liquidity within the policy if the client would need to go into a long-term care facility or possibly even have in-home care as well.
Yeah, and also because it's on an IUL chassis, I would assume that there's still some fairly decent, if not significant, upside potential. They might actually see their cash values grow, right?
Sure. You can have cash value growth, and you can also dial in a return on premium rider to also give that client an exit strategy if that's something that would add a little sizzle to the sale as well.
Love that. If an agent is watching this video and we've intrigued them, maybe they've thought of a client that might be a good fit for a GIUL, how might they get an illustration or a proposal?
I love that, Randy. Thought of a client. Write that client down, email anyone on our team. Myself, Brady Doppler, Jim Paris, Ray Parman, we're all here to help, to be a partner, to help you grow your business. So if you give us a ring, give us an email, we'll help you build that case out. We'll give you the talking points, and heck, we'll even help jump on the phone as well if life insurance isn't your niche marketplace and help you make the sale.
I love that, Craig. Couldn't have said it better myself. We are here to help advisors watching this video be more profitable, make more money in the insurance business, and frankly, be a better resource in providing suitable products for their clients. But unfortunately, Craig, we've reached the end of this segment of Selling Life and Annuities. I want to thank all the agents watching this for taking part. Please do me a favor and click subscribe at the bottom of this video, as well as the notification bell. So the next time we come out with some valuable content that may have a positive impact on your business, you'll be sure to be notified. But with that, thanks for watching and happy selling.